Record. Hi, Ashwin.
Hi.
Good to see you. I have a few questions. I'm so excited to ask you. Looks like you've nailed it again. Can you tell our viewers what happened?
On 30th September, the S&P dropped more than 5%, staging the first correction in 2021. We published a video called How to Profit from Market Volatility. And
Yes.
we advise investors not to panic and to buy quality companies. On 14 October, just last night, the Dow Jones picked up 534 points after staging a correction for 2 weeks.
Amazing.
And this was the biggest climb since March due to stronger than expected earnings.
Amazing. So what's your view for next year, 2022?
Despite the Fed taper, we see the S&P climbing to 5,000 next year and the NASDAQ to 16,000. Once again, we advise investors to buy quality companies with healthy balance sheets and strong pipelines.
You were saying that we could buy top class companies. Everyone can afford to do that. Can you please explain?
Nowadays, it is not cheap to invest in top class stocks.
No.
Because the prices have gone quite high. Now, CFDs, also known as contract for differences, enables average investors to invest in top class companies by only paying 10% of the actual value of the stock. For example, Apple is at $143 per share. By using a CFD, the investor only pays $14.30 US per stock. This makes a big difference. So an average investor with a small amount to invest between 50 to 100,000 can now buy top class companies without busting his bank.
Does everyone qualify?
As long as you have 50 to 100,000 US, you can qualify, and we will hold your hand. I'll explain this to you later. And what else do you get? Our kind of intelligence, our kind of financial intelligence that no one else has. I'll elaborate later.
I know, because I'm experiencing your expertise. So what else makes your trading system different from everyone else's?
Lovely question. Last year in March, when the market dropped 30%, all the machine-only algorithms were shorting the market, expecting a further drop. They are machines only, meaning they do not have human intelligence, and they look at past data. That is all they look at. When the market picked up by 35% by April and May, these machine-only algorithms started losing money because they were working on past data, nothing else. They did not understand that the Federal Reserve was pumping in $120 billion a month to boost up the stock market at any cost.
Wow.
This is where the past data is obsolete. So our algorithm is 75% machine, but 25% human genius. That is where we are the game changers.
So what does it mean, 25% human genius? Do you get to adjust the biases?
Every weekend, we tweak the bias according to what has happened during that week. And what else? We also have access to data such as dark pools and options market, which the average investor does not have.
So you're saying that your accuracy comes from the depth of your research and being able to track who is doing what and the flow paths?
We have a good access to the flow, but what is important here is this. We have access to dark pool data. Dark pools are private exchanges that banks go to when they want to buy $100 million worth of a particular stock. They do not come into the public market to buy that stock. They go into the dark pool. And this is what we have. And because of this, we are one up. For example, last Wednesday, when Apple was dropping on news that it cut its iPhone production by 10 million units, we were actually buying Apple while the market was selling. Why? Because we have evidence in dark pool data that despite the production cut, which is temporary anyway, Apple has been bought by institutions in a very big way. I'm talking about more than 100 million shares.
Wow.
So I'm now proving to you actual live action. On Wednesday, we bought Apple at below 140 per share, as low as 139.40 per share. And last night, Apple went above 143.50 per share, in fact, close to 144. It shows you exactly what the power is behind dark pool data.
So because I'm trading with you and you're trading for me, I have access to your expertise. And I know from working with you that we are able to buy quality names at reasonable prices. So that's one up. And then because you are able to track what the big boys are doing, where the big money is flowing. So we're always very close to where the profits are. So we're very sure-footed. And I wanted to do this video to help my friends and associates to get to use you as well, because otherwise, from my past experiences of using banks and other big financial institutions, this is so boutique and this is so bespoke that I'm very confident about what I'm doing. And of course, with your hand holding, I know how to plan my finances going forward. So buying cheaper, knowing where the flows are, what other advice can you give retail investors?
Before I finish this video, I'd love to leave retail investors with a very important aspect to look at. Before you embark on an investment journey, I mean, everybody wants to make money, that's for sure. Nobody wants to lose money. Ask yourself two honest questions. How much paper risk can you afford? Notice I mentioned paper risk, not actual risk. Secondly, how much time can you wait? Why paper risk? Markets do not go up in one direction. While you're waiting for the market to go up, you will definitely have some paper losses until the stock price goes up. The stock price doesn't go up in one straight line. It drops, it goes up, it drops, it goes up. That kind of thing happens. So if you cannot afford paper loss, then it's very difficult to trade and invest. But if you can assign 20% of your actual assets under management as paper losses, not confirmed losses, paper losses, it'll be very easy to trade for you. And if you can wait 6 to 12 months, half the battle is already won. And
so how much yields are we looking at?
Sorry?
How much yields are we looking at? Like 15, 20, 25?
We are looking at 20 to 30% per trade.
Wow.
Okay. And I'll tell you why right now. I'm not bragging. I'm telling you why, honestly, you should join us. Because of the quality of our financial intelligence. We have an algorithm that is 75% AI and 25% human genius.
Yeah.
The research that we have looks at what is going to happen, not what already happened.
I've worked with so many remisiers in the past, and I find that you are so different because you don't sort of what we call chase the market. You know, I used to get pressured phone calls. You got to do it because that one is climbing. That, you know, don't miss out on the action. So how do you do it differently and we still don't lose out on the action? You know what I mean?
Because the Asian mentality I've seen after 28 years of my life is to always buy stocks when they're going up. That is already wrong. Before you can start, you will lose money. If you have the psyche of buying something when it's going up in value, don't do that, please. I advise all retail investors, change your psyche. Number one, research the company that you're buying very carefully. Understand everything. Like I say a naughty analogy here. Get to know the company better than you know your wife and your girlfriend. Okay? Once you know a company like Apple, for example, you know what the pipeline is, the product is, you know what the plans are for the next 5 years. If Apple comes down, you will never get scared. We were buying Apple when it was dropping because we know the company. So once you do that, when it's dropping, you buy. What people don't realize is this. When you buy a stock when it's dropping, okay, it is less risk than when you buy a stock that is going up. Think about that carefully. and I'm giving
True,
you
true.
buy
It
something
seems like
with
you're
double
so
investor risk.
sure-footed.
Yes. So once you've got your risk sorted out, and you've got your time sorted out, and you've got your quality financial intelligence sorted out, like I was saying earlier, what we look at what is going to happen tomorrow, not what already happened yesterday. So yesterday the market went up 534 points. Now we will tell you what's going to happen in the next 3 months.
Yeah. I remember, like being chased to say, take out after you made 20 cents, take out after you're making 50 cents. But now I'm making like a few $100.
Okay.
You know?
I'll give the layman a very nice example. Our smallest client last Wednesday invested $840 in Apple shares using CFDs. And in 48 hours, they are making $260 on an investment of $860.
Amazing.
$840. Can you see? If we can spread this goodness to every man on the street,
I know.
$260 of $840 investment.
Amazing.
In just 48 hours. Because we understand what we're doing, we understand what we are buying. This is where it's very important. The quality of your financial intelligence is very important.
So you're selling accuracy.
The size of the investment doesn't matter. It's what you know matters.
You are selling accuracy.
We are selling accuracy, and we would like, from the bottom of our hearts, for every single investor out there to experience what we are doing. It's not flip shot. It is not guesswork. It is professionalism. And for that, we are having a special package of only $5,000 a year, where we will hold your end 100%.
Thank you for that. Thanks for that offer. And I hope many of my friends will take it up. I have personally experienced you, and this is why I'm doing this video, to spread the word. Now, if we wanted to contact you, how would we do so?
My email is ashwin@ppchk.net. I repeat, Ashwin, ASHWIN, @ppchk.net. And we also have a direct link on WhatsApp, bit.ly/algotrader or bit.ly/algofactory for Telegram. I repeat, bit.ly/algotrader for WhatsApp and bit.ly/algofactory for Telegram.
Thank you so much for today. We'll see you again next time.
Thank you, Jessie.
Thank you, Ashwin.